And again, I do apologize for rudely cutting you off, but we're in time crunch and you did
Sure, I
submit
understand.
really excellent testimony, so we can also follow up with questions for you in writing afterwards. Is there anything, Felix or
Toby.
Brad?
Thank you.
Do you want,
I mean,
please,
okay. So
quickly?
just to recap, your supposition is that fossil fuel stocks are not a good investment, and that they're a dwindling value for the New York State Pension Fund. And I think you're also saying that the ultimate fiduciary responsibility is saving our planet. Could you just recite again the statistic on the declining value of petroleum stocks?
Sorry, the decline value of
Petroleum stocks.
sure. So the number of the 5.3 billion of performance, or
Yes.
sure. So we looked at the New York Common Retirement Fund, and we looked at the total assets that the top 100 holdings invested in fossil fuel companies, so carbon underground 200 plus coal utilities. We removed that money out on October 1st, 2012, which was when the divestment movement began. And then we reinvested that money to what we called green blue chip companies that were already in the portfolio, proportionate to those companies' size. And then we ran the numbers over 3 years, rebalancing at a quarterly basis using free float market capitalization, and came out with two portfolios. One was the original portfolio of the 100, and one was the clean portfolio. And the clean portfolio outperformed by 5.3 billion. Now, just as a quick, is it clarification on Comptroller Tom DiNapoli? He wrote a nice letter to Senator Krueger who said that the fund had actually gained 1.8 billion dollars on oil and gas stocks over the last 5 years to the time he'd written that letter. And I think that's not really the question. The question is did that make more money than would have been made if the money had been put to work in the market in general? And the market in general over that time period returned with dividends reinvested in the neighborhood of about 80%, talking about the U.S. market. And if we look at what their allocation was to fossil fuels back then, it underperformed substantially. So our numbers, just back of the envelope, looking at that number of that 1.8 billion, our numbers are consistent with his. And if he was to run the number and say, how much extra money would we have made had we divested from these stocks and redeployed that capital in the market in general, I think he would come up with quite a similar number to that $5.3 billion that we came up with, possibly higher with covering more asset classes.
Thank you very much. Appreciate it, and we're going to turn you off Skype now, and thank you for testifying today.
Thank you. Take care.
Thank
Good job.
you.
Thank you.
Good job.